welcome to Street Check, the best podcast in the history of Cabot Wealth Network, which dates back to 1970. I'm Chris Preston, Chief Analyst of Cabot Stock of the Week and Vice President of Content.
And I'm Brad Silverman, Web Editor and Chief Analyst of Cabot Wealth Daily. Today we are joined by Jacob Mintz and Mike Santolo, Cabot Options Trader, Options Trader Pro, Jacob's Private Circle, Profit Booster, Top 10, and Cabot Growth Investor, respectively. We are going to forego our normal format this week, and we're just going to talk the market. So, gentlemen, welcome.
Good to be here.
Thanks for having us.
All right, Chris, you want to get this started? Do we have a high-level take on what our premise is this week?
Yeah, I mean, we're in a bull market now, and not just a pretend bull market like it was, maybe a month ago when it was.
Let's say technical and not pretend.
Potato, but it's not just the mega cap tech stocks anymore, and it's not even just AI anymore. A lot of sectors and stocks have joined the fray. So this is the best time to invest in at least the last year and a half, probably longer. So how good are things out there? You guys are both, in the growth realm to, different angles. Jacob, you as an options trader, and Mike, growth investor. Mike, let's start with you. Market timing is sort of your specialty. What are some of your indicators that you track? What are they telling you now? A lot of people say we're overcooked here, but new bull market, it's a new bull market. So new bull markets don't usually fizzle out this quickly. What are you seeing?
Right, exactly. I mean, short-term, long-term. So right now, or like this week, we saw, I don't know, Jacob, what was it? It was Carvana. There's a couple of you mentioned the Trump ETF for the Trump stock is going up 1,000% today or whatever. So there's some speculation out there. The rally's been going on for like 2.5 months without any pull. I think we had a 6-day pullback one time. So it's starting to get to the point now where it's like, oh, hey, inflation's low, things are good, the news is good, and so I do think we're probably getting close to the first sort of, I'm going to call it a pullback, not a correction, in the indexes and some rotation and stuff like that. But yeah, no, I think that, dips are going to be generally viable. Some stocks will blow up, just they always do in earnings season. But yeah, it's a bull market. I think we're going to go higher down the road. There's no surety, but I'd say it's a very good shot. But yeah, short term, I think the last couple of weeks we saw some selling on strength and gaps higher that were sold into. So, it wouldn't surprise me if you're finally getting some people to take some profits here, and some of the late buyers will probably get, smacked around a little bit, but that's what I see at the moment.
Yeah. And Jacob, you mentioned the other day that junk stocks have started to join the rally a bit. At least what you're seeing on the options in terms of options activity. How concerning is that to you? Is that just a minor red flag or just something to track?
I would go with the minor red flag type of situation. It's the thought process when you see these junk stocks rallying is just that, all the easy money's been made in the Microsofts and the Nvidias, and now traders are looking for ways to get that last piece of action, that last real rally. And so they'll start chasing the Carvana, which was up on news, Groupon, which has been just an awful stock for years. That's those type of stocks, the DWAC, the Trump-related SPAC is running really hot today. And you start to see call buying in these stocks, the weekly call buying. So it's just like the late stage type of action. That being said, I'm pretty bullish on the market. Mike said, I wouldn't be shocked if the index is pulled back, but it kind of feels like we're in a rolling bull market. So, growth stocks got hit yesterday, but stocks in the medical device space took off on Abbott's earnings. Today, the oil stocks, which, last about a week ago, oil stocks got hot. And then they sold off just because all the money moved into growth stocks. Well, growth stocks sold off, and now money's running back into oil stocks. So it's kind of, from my eye, it kind of feels like a rolling bull market. There's going to be some rotations, and it's going to be, kind of hard to hold on to a lot of these stocks when they're selling off. But big picture, the money just keeps moving into new sectors. So I'm encouraged.
Is there any sector or class bias to the junk stocks that people should be on the lookout for? Like, hey, if you are in telecoms, the junk's running hot, so maybe step back. Any kind of bias there?
I guess I didn't even know the telecom was still a thing these days.
Just the first word that came to mind.
Yeah, no, I understand what you're saying, Brad. No, it's really the meme type stuff. Mike, I know shares these kind of concerns with me when he starts seeing like GameStop take off, or when he'll often say to me, he's like, these meme stocks, they just won't die. That the GameStop, the AMCs, that Groupon, Carvana, Affirm, that was the buy now, pay later type stuff. When that stuff starts going, it's concerning. I'm not going to sell everything, but it's it raises the yellow flag, certainly.
Yeah.
So like Bed
stuff
Bath
that
and
didn't
Beyond.
do anything. Yeah, it's the stuff that didn't do anything. It's not like they took off at the beginning of the rally and it's like, well, it's like Palantir or something was AI. That was a garbage stock, but turned into kind of a glamour name. It's these things that are just, no one wants them. But then 6 or 8 weeks into the rally, it's like, oh, maybe we can, drive this thing up 15% in like a day, and people are trying to make fast money, so.
Or Bed Bath and Beyond in bankruptcy, up 61% in the last month.
Perfect. Exactly. Well, I guess I was going to ask Mike, what's your level of concern in terms of, where your spidey senses telling you, or in terms of risk, and when would you start selling?
Well, I think it's going to be a stock by stock thing. I feel like the first pullback, this is my mind's eye. If you own 10 stocks, this is very generally speaking, but if you own 10, you might get knocked out of a couple. You know what I mean? Just whether it's something had stalled out for the last month that you're trying to give a chance, but then it breaks down. So I'm not concerned. I agree with you about the rolling stuff. I'm a little bit more like, some of the growth, if they pull the rug out from the NASDAQ, meaning pull the rug out means 6% down or 7% from the high, which would be totally reasonable. But, some of these stocks are going to fall 22% or whatever, so it's more about how to handle that. But I'm not, in terms of the overall market, I think what Jacob's saying is it's another sign that there's not much selling out there. There's some profit taking over here, but they're buying over there because everyone already sold the last 2 years. They come out with the Bank of America institutional survey. Everyone's still loaded up on like cash, bonds, and utilities and defensive stuff, in general. So I just feel like I still think we're going to go higher. It's just a matter of, if you own the indexes, I wouldn't really be worried at all. Individual stocks more so. And then if you're like Jacob and every 50-cent move in a stock causes your P&L to go up 25% or down 20, like I'd be more worried. So
that leads me to something that I wanted to talk to both of you about. You mentioned the Bank of America institutional survey. Smart money, hedge funds, big money. Are we still seeing them on the sidelines? Have they started to participate? My premise for the first half of the year was really that this was a retail driven rally. What are we seeing? What are you guys seeing now?
I don't know exactly how to measure it. I just know the surveys, like the one just came out this week. Put it one of my slides for next week's presentation webinar is, they're still, like I just said, like compared to the last 25 years, they're like historically underweight equities. So I assume they're buying. That's why the market can't pull back much so far, right? Every time we pull back or a group pulls back for a week, it just kind of go smoke up a chimney the next week sort of thing. But so I assume they're buying. I don't know about the retail thing. I mean, Jacob, have you ever seen I know what you mean, Brad, but I don't know, like somebody going in there with their 30 share order. I don't see a bunch of those driving these like Meta. I don't think that's why Meta has been going straight up here for the last few months,
Right. I will say, in terms of my world, option activity has been really hot the last 3-4 weeks. So that would tell me that the institutions are, getting back in, that institutions and hedge funds are getting back in. And kind of like what Mike said, I'm not looking at somebody buying 3 weekly calls. That doesn't really, that means nothing to me. It's when a trader's buying, I don't know, $30 million of Amazon calls and $50 million of NVIDIA calls. That's what, we're seeing a lot of that kind of activity. That's why I've been adding more and more exposure to the portfolio. That, along with the VIX at like 13, 14 range, there's just not a lot of fear out there. Those are really my greatest indicators is, obviously the market going up and stocks going up that I like, but as well as option activity has been strong. The VIX has been, quiet. So I'm definitely seeing a lot more hedge fund and institutional activity getting on the bullish side. I will say, kind of piggyback on the question I asked Mike of sorts, the one thing that kind of worried me yesterday, when you see like the leading growth stocks kind of get hit on good news, that's a little bit of a concern. So like super micro, it's SMCI has been a real leader. I mean, the thing has just blasted off. It's kind of, Mike would know the details about this stock, but it's, on the AI type play. Yesterday they came out and pre-announced earnings, and the numbers are ridiculous. So initially the stock, it's been up, we'll make it up 250% in the blink of an eye. It came out with great numbers, and the stock tanked like $15 or $20. So that was kind of a concern to me in that moment, but slowly throughout the day, the stock rebounded again. So, if we see NVIDIA come out with blowout numbers and the stock falls, I'd be concerned. Same with Facebook. I mean, all the big players are announcing earnings the next week. So definitely the reaction, I'm not necessarily worried about the numbers. You could give me the numbers, the revenue and the earnings numbers ahead of time. I don't know how the stocks can react. It's the reaction that's where I get kind of more interested. And we'll see, we saw Tesla sell off on earnings, Netflix sell off on earnings. So that's kind of, if I want to be nervous, I would watch the big leaders to see how they react to positive news.
Right.
Yeah. I got an email from a subscriber to Stock of the Week the other day asking question you're just sort of addressing, Jacob. When do I take profits on some of our positions? What is your recommendation? I said, the ones that are at 52-week or even all-time highs and they have yet to report earnings, those are probably good candidates because the good earnings are probably already baked in. They can not only, but there's a much greater chance than not that they'll fall after earnings, because unless it's a perfect earnings report, it's probably not going to take off another 30% or something like that. I don't know if it's a fair assessment, but with FactSet's earnings projection for this quarter was minus 7.1% growth, which seems a little pessimistic to me. This was 2 weeks before earnings season started. But that means there's a lot of companies that are going to report negative earnings. Maybe not NVIDIA, probably not, definitely not NVIDIA, but some others out there.
Yeah, you're kind of this kind of negative news, I know, is what kind of gets Mike excited. He loves seeing negative news in the market.
Bring it on. Yeah. Chris, don't get me too excited. I gotta go. I might have to place an order.
Yeah.
Maybe if earnings are down 12. I mean, yeah. All that stuff is it's backward looking. The market's looking at December and next January. So I don't mean to say like second quarter earnings don't matter. The reports matter, obviously, in the outlooks and stuff. But the market's generally looking at what that means for Q3, Q4, that sort of thing,
Right.
But yeah, I don't know. I'm hoping, I mean, yes, I think Jacob, I don't know. I do joke around because, options are just so much more sensitive to the stock price, but hopefully we can get some of these stocks to run for 9 months. I mean, not straight up, but so, I think some of these things, if people want to sell, I think it's fine, but I try to tell them to take some partial profits. I know Jacob does that almost systematically anyway. But take some partial profits and then try to let the rest run, give it some room. And, some of these you'll feel stupid for giving them room because they come down and stop you out. But you catch one or two of these things, two of these tiger bites, they can really make a huge difference if they can run for, as opposed to 4 weeks like we've seen, or 8 weeks, they run for 12 months and the thing's up 400%, that sort of thing. So.
Yeah, I would say that Mike and I both actually buy these breakouts in general, especially post earnings. I mean, that's kind of been one of my best strategies over the years is, like for example, DraftKings, a stock that both Mike and I like, blasted off on earnings. I bought calls. Mike, I believe, owns a position as well. And, I like buying that strength. It's, the hedge funds and institutions are, waking up of sorts to, the, potential positive story turning around. So I know it's not sexy of sorts to say I chase these stocks, but I'm chasing these stocks, hoping that, that the institutions and hedge funds are doing the same, and they have the real buying power. So, but to Mike's point, though, I do take profits at like 20 to 30%. I sell a third at that level. I sell another third at 100%, 80 to 100% level, and then I just let the rest run as high as I can. So I'm not trying to top tick a stock. I'm not that smart. I can promise you that. Everybody on this podcast can tell you that I'm not that smart. So
we have a segment for that later.
You can't say again, Chris.
We have a segment for that later in the show. Yeah.
So, if you have a system, and then you're not going to second guess yourself. If it's, sell a third, sell another third, and then let it run. That's my system.
Yeah.
Well, that's the beauty part of the bull market is the system trading it overrides individual selections. If you're adhering to a system, the tide is rising, it's lifting all boats. So even if you've got an imperfect system, if you're trading with intention, now's the time to be doing it.
Yes.
Yeah, no, it's great. I'm just really enjoying the fact that after 18 really tough months, we're finally back to a period of time where it's like, all right, well, yeah, we can get some really solid, profitable trades. The environment's far more favorable, sentiment, looking up, and people are optimistic again, which is great. It's a good change of character.
Yeah, as I'm thinking about trademarking, up is good. So
yeah,
it's good. Rising tide does lift all boats. That said, I do think we, Cabot as a whole, and hopefully me and Jacob, you want to hone in on some special situations or the real true market leaders, as opposed to just getting in whatever stock that goes up 10%. That's kind of where the difference is.
Yeah. And Mike, you had a great stat that I saw the other day, that the market over the last 20, I think it's S&P, over the last 23 and a half years is up an average of 4.3% a year. I think is that.
Yeah, that's in the slide. Yeah, it's just bigger picture than it was in the NASDAQ. The NASDAQ, this is
NASDAQ. Okay.
This has nothing to do with right now, but this is just mega picture. And the point of it is that I think we're going to go to new all-time highs.
Yeah.
The NASDAQ went nowhere from 2000 to 2016, zero. And then it went nuts. It tripled in 5 years. But I think that this bear market that we had is sort of a quote normal bear market. It's not the start of a 10-year, 15-year stretch or whatever of no progress. But yeah, net, I think it was 4.2. I forget exactly.
Yeah.
Annualized from the 2000 top. So it's, when you look at a big picture perspective like that, it seems like that last 5 years was huge, and it was, but I don't think it was like some sort of 1999 or 2000 top. You know what I mean?
Yeah. Yeah. I mean, between that, that, like you said, that's, a million-foot view. But that, and then, the closer view where you said the S&P dropped 27% in this bull market and NASDAQ 38%. So to go from that to people sort of feeling, because the VIX is low and stocks have been going nothing but up for a few months now, it seems like it's more of a feeling that things are overbought now than an actual fact. I know the S&P, the PE ratio is getting a little high, but not. I imagine you don't care a whole lot about S&P's PE ratio.
What is this PE thing that you speak
I know, I was going to say, Jacob, can we get your macroeconomic opinion on this?
All right, I'll bring in macro. So Bruce Kaiser just wrote about this. S&P 500 PEs around 26 or 28, but if you remove the mega cap 8, like the 8 biggest tech companies, it gets down to like a much more reasonable 16.7 or something around there. So PEs for the broad market are not like historically overvalued. They're a little bit inflated, but not dangerous. The big cap tech stocks, though, that's the one where they're grossly overvalued, and that probably gets back to what Mike was talking about with, okay, well, if these individual companies come out and they don't kill earnings, you get that correction in the big tech stocks, or the guys, the high flyers from the 6 months leading up to now.
You want to handle that one, Jacob? Or no? I'm not a PE. Yeah, I know what you mean, Brad. And I think eventually that stuff matters. And maybe a few years from now it will, but I don't know. The market just I just remember, every time the market gets going, the first month or two, it's like, how can the market go up? The valuation, this and that. And then 6 months from now, it's going to be like, how can the market even go down? All the news is good. It's a sentiment pendulum, and the market's looking ahead to good things. I think, I don't know, and this wouldn't affect my investing at all, but market does love soft landings, and it might be looking at a case where everyone's been predicting a recession for whatever, a year now. And maybe the market's saying, hey, the Fed's going to finally get off our back, and the economy's going to be fine, and inflation's going to come down. It could be kind of a Goldilocks thing, and earnings do better. But whatever it is, the market's looking ahead and clearly likes what it sees. So,
and just to kind of answer of sorts, Brad's PE talk. I went to a decent school. I'm kind of sharp. I like to make fun of myself that I just try and keep it KISS. Keep it simple, stupid. The PEs matter. I'm sure Ben Graham knows more about the market, and Bruce knows more about the market than I ever will. But the Dow is up 9 straight days, its longest win streak since 2017. Just keep it simple. The market is kind of in gear right now. That's not to say it can't fall, but it's in gear. Keep it simple. The PE stuff will shake out when it does, but until then, if you own DraftKings and it keeps going higher and higher, I don't really care what the PE is. I know that's some people just shake their head in disbelief that I say something like that, but if it works, it works.
It does sound like heresy a little bit, but I think to sort of summarize it for listeners, the exuberance is overriding the fundamentals right now. So let that be your divining rod.
Yeah, I feel like I've heard in every bull market, the value guys like, wait, but the PE, this can't keep going up, and it keeps going up. The value guys screaming against, no, wait, this isn't allowed to happen. Clutching their pearls, and it just keeps happening. And I certainly think that's the case when, that's why I was referencing. We just had this 18-month or close to it bear market. This is the start of something, and values don't matter, especially at the start of a new bull market. I don't think.
I wanted to say something you had asked before, and I don't think I answered it, but you said something about overbought and all this. But Walter Deemer, who's like an old-time technician, he's still on Twitter. He had, well, anyway, in some book he wrote, but he had a phrase where he says the market gets most oversold at the bottom, and it gets the most overbought at the beginning of a new advance. So it's not a mirror image. So usually at this point, 6 months from now or 3, like that's different, because then there's more stuff has been built up in the system. But at this point, it's just kind of a vacuum of selling pressure is the way I look at it. You know what I mean? And that's usually a bullish sign. It correlates well with higher prices down the road. That's all. So,
yeah. Are there, certain sectors outside of AI that really you're seeing now that you're noticing that more and more stocks are popping up? Is Jacob, I guess you, with the options activity you see, is there sectors that stand out really now outside of AI, or is it just is it coming from everywhere?
Well, I mean, I didn't mean to take a shot at Brad so early, but listen to the podcast last week.
I thought that was late, honestly.
I listened to the podcast last week, and he said he wouldn't be a buyer of the regional banks and the banks. And I did a little research. They're up 9% since he said that last Friday. So that's encouraging to see the banks take off. That's
the counter indicator.
Yeah, we know Brad knows that he's a counter indicator.
Yes, exactly.
Yeah.
Jacob, what are the PEs on those banks?
I'll get right back to you on that, Mike. Thanks. To see the banks up, that's always a positive sign. That's an old school trader thing. You don't want to see the banks or the semiconductors or sectors like that weakening. We did see the semiconductors take on a little bit of water yesterday, but the regional banks look good. I was talking to Mike. Mike and I talk on Slack, which is an instant messaging tool, and we talk on the phone as well. I've just noticed that the trucking stocks are taking off to the upside. It's like, that's kind of one of those under the radar type sectors where it's like, well, what is going on here? XPO, just last night, Night Swift, I think they had okay earnings at best. Stocks, everyone was like, oh, not such great earnings. Stocks up a couple percent again today after being on a run. So, when you see stuff like that, that's pretty encouraging. That's, it's part of the rolling bull market. We just keep finding new sectors that are taking off.
Yeah. Mike, any non-AI sectors you really like right now?
Well, I mean, I'm never going to be Mr. Cyclical, but I mean, I do think the oil service thing appeals to me just because the group has been in the doghouse for since 2015. Mm-hmm. And you're seeing some of these, and the cycles tend to be long. It's not like, I mean, obviously if oil crashes, but it's not like they're just going to build a bunch of new rigs tomorrow, where it's like, oh, we just came up with 50 new rigs, offshore drilling rigs, so it tend to persist. I do like the infrastructure theme. Some of it's roads and bridges, but there's a few stocks we own, Mastech, that are kind of green energy and stuff like that, infrastructure. So it's not, I like to have not all fastballs in the portfolio, just so when things do take heat, you're not running for the liquor store or whatever. So, but those are probably the themes. But airlines look good, oil stocks, like Jacob said, the Dow transports I mentioned in the video I recorded, they're just straight up like this the last 2 months. So it's definitely broadening out. It's a big rally.
What's the other Dow? There was, I'm going to blank on it, an indicator that if the Dow transports and one other Dow subsector were up simultaneously, it was like the hallmark of a bull market. Is it just transports and industrials?
Yeah, it's the old Dow theory. I know Jacob studies up on that. No, but I think it was from 1910. Yeah, no, our old Cabot trend lines used to be based on that. Basically, we switched it up maybe 20 years ago, but yeah, basically when the trend is up, industrials and transports, it's a good thing. Right now, the trend is up for most everything, so that's a good thing too.
So, I mean, Mike, I know no one at Cabot, you two especially hate doing the crystal ball thing. You don't like to look ahead and make any predictions, but Mike, I think your indicators are suggesting that 6 months, 9 months, year from now, that stocks should be up and up fairly substantially. At least based on what markets like this have looked like in the past, right?
Yeah, I don't want to predict numbers or anything, but I would just say the odds favor the market is acting like it's a new bull phase. Maybe this is one of the 10 times that it's it throws us all a curveball or whatever, but I'd rather go with the odds. So we went down a lot, we bottomed out a lot, and now we went up in a decisive way. I know that's pretty simple, but there's a million ways to measure that, and all million of those studies that come out say the market should be higher down the road. Who knows? Maybe the Fed comes out next month or next week, I guess, and says, screw it, we're going to raise 75 basis points and ruins everything. But I don't think they're going to do that. So yeah, I'm optimistic. I think the path of least resistance up, and I think most importantly, beyond, is the S&P going to be up 10%, 20%? It's more like, hey, we should be a lot of these potential leaders should be early stage, which means if you find the right one, you can ride it for 6, 9, 12, 18 months, hopefully, and make 500% in the name, that sort of thing. And that can make the big difference in your portfolio.
Would you guys be buyers of any of the beneficiaries of the AI boost right now? We're sort of 6 months into that AI-driven rally. NVIDIA's flying high. Supermicro, you mentioned, was up it's up 300% in the last 6 months, 250% year to date. Would you guys be buyers at these prices, or are those even too overcooked for you?
I can tell you that I was a genius when it comes to SMCI. I bought it at 60, I think, and I sold it at 95. I thought it was brilliant. I just missed the last couple 100%. So that was before. That's kind of how option activity works. Is there was tons of call buying in there. I had no idea what SMCI does. I'm still not exactly sure, to be perfectly frank. But the stock was starting to get going. Option activity was cooking pretty hot, so that's why I got into it. There's been a lot of call buying in Unity software, where symbol U. It's another one of these. It's an AI related play. I think they have some type of new deal of sorts with Apple. We have a position in Unity software. Shopify. I mean, it's hard to know right now, of course, because everyone's just talking about AI. So this earnings season, AI will be the buzzword. So it's hard to know who's just saying it to act like they're in the space and who's not. I'm not afraid of buying these things. As long as it's going to be a bumpy ride. There's no question. Mm-hmm. If you get involved, you could top ticket, but that's kind of why I use calls, because if you top ticket, your capital at risk is exactly what you paid for an option, and if it doesn't work, then you move on.
Interesting that you mentioned Unity software. I just got my son a new computer. We just installed Unity. It's a game development platform that allows you to use pre-created models, and it's a low-code environment. I'm not entirely certain on the terms with Apple. I believe that there's it's sort of fast tracking to the App Store or something like that. I don't know, but the software itself is very interesting, and I've found it to be very easy to use and worthwhile. I don't know about fundamentals or profitability or anything like that, but just from a user perspective, solid platform.
Yeah, the low code environment is exactly why I bought college.
I could see those words literally flying over Jacob's head when you said them.
You guys have to know low code. All right.
I know what you
I don't know.
Low code.
Brad, you have to bring it down a few levels when you talk to Jacob. Just talk about strike prices and the stock going up. You know what I mean?
Yeah. Last question. It's Barbenheimer weekend. Premieres of both Barbie and Oppenheimer in theaters. As the Barbie and Oppenheimer of Cabot, Jacob and Mike, which do you plan on seeing in the theater? Either, neither, both?
Well, I can tell you that I said to my wife last night that I had interest in going to see Oppenheimer, and I just got like a grunt, like I don't care. We're not doing that. So I might just have to go by myself, and that's actually probably not going to happen either.
Yeah, it's kind of what I got. Mike.
I'd love to. I'm kind of a history buff, so I'd like to see Oppenheimer. I'm not sure if I will. Thankfully, one of the neighbors' wives volunteered to take a bunch of the kids to go see Barbie tonight, so I don't have to participate in any of that stuff. So, but I don't know. I thought Oppenheimer would be kind of cool. I'm sure they probably added a few drama things to it, but it was kind of a cool part of history. So.
I've seen headlines that people are literally like booking flights to catch the 70 millimeter IMAX print of Oppenheimer live, which is insane, and nobody should do that.
I was going to say, how much was your ticket, Brett?
Hey, it's hot out there in Arizona. He's got to go to the one cool place in the whole state. That's movie theaters.
If people are booking flights to go to another city to watch a movie, then the Fed isn't done raising rates.
I was going to say, yeah.
Oh, true. Oh, walk into any airport and just see that there's no recession in sight. Brad, what are you saying?
I don't know. I think I'll join Jacob in the solo Oppenheimer session. I don't know. That Barbie one looks weird, which could be a great thing or it could be a terrible thing. I don't know, but I said it in a company Slack, to see once Oppenheimer, to have to see more than once, I'll pick Barbie. I think Oppenheimer is going to be a masterpiece, and I will never watch it again.
Yeah. I would like to see Oppenheimer, which of course, which I ran by my wife. We're seeing Barbie tomorrow night. Thanks, Mike and Jacob, for joining us. Just so, Brad, you mentioned them at the top. Jacob runs Cabot Options Trader, Cabot Options Trader Pro, Cabot Profit Booster, investment advisories. So I highly recommend subscribing to any of those. You can go to our advisories page on our cabotwealth.com website, and then Mike, Cabot Growth Investor, Cabot Top 10 Trader, and then you also have a webinar next Tuesday at 2 p.m. Eastern, right? What are you going to be talking about?
Yep, we'll be talking about just a little bit more in depth about I'm bullish, and why. Not too long, 25-minute talk, go over some stocks I like, second half of the year outlook, but yeah, kind of laying the groundwork for why you should be bullish, and when these inevitable sharp drops come, and you kind of there's some bad news hits, which it eventually will, just keep in the back of your mind that it should be a bull market that works its way higher over time. So
yeah, that's the first 15 minutes. The last 45 is Patriots training camp opening, right?
Rookies report today, my friend. So the next podcast we will have the full report, but
okay.
Yeah, we're hoping the Bills come back down to earth, but I'm not sure there's much hope there. So
there's nothing. It's kumbaya there. The star receiver and the quarterback are getting along beautifully. I think
it'll be the same thing. The Patriots will play well for 3 quarters, and then Josh Allen runs around and flips his wrist, and he throws an 80-yard touchdown over somebody, and we'll, so
yeah. Well, as long as it's not the playoffs. Well, thanks for joining us. And if you want to sign up for any of those, go to the cabotwealth.com website. Brad, any closing words before we sign up? You're hot there. I know that.
With the VIX low, now is an inexpensive time to buy options. So if you're considering implementing an option strategy, now is a good time to do it. And our good friend Jacob can show you how. So that's my last plug. Low volatility buy options.
There we go. Said it better than Jacob could have himself.
It's because the word volatility has a lot of syllables. So
it does. Well, thanks, gentlemen, for joining us. And as always, if you're listening to this, please give us a subscribe. If you're not already, hit the like button.
Email at streetcheck@cabotwealth.com if you have questions or comments or want to provide feedback on any of our segments. Email us.
Streetcheck@cabotwealth.com. All right, now I know it. All right. Thanks, everyone, and we'll see you next week for the next episode of Street Check.
Bye.
Thanks, guys.